Still 10 days into October, and we have seen wild swings in financial markets, well beyond anything so far this year. Yesterday's 330-point drop in the Dow Jones Industrial Average was kicked off by warnings of a major slowdown in the German economy. The fear is that a slowdown overseas will hurt exports from U.S. companies. Now, multiple other factors are also in play here. Joe Krier, president of Krier Wealth Management, is here to discuss them for us. Good morning to you. Thanks for being here. All right, so the last few days have been a little crazy, a little wild, as we've mentioned. People worried?
Yeah, they are. The phone's ringing a little bit here.
It's off the hook, huh?
This summer was probably the most quiet summer we've seen in 5 or 6 years. There was times when the markets didn't even move for 15 minutes, which sounds like a short period of time, but it's an eternity. All of a sudden, October kicks off, and 7 out of 9 days, we've seen swings of 200 points or more.
Why is that? What is the fear here? I mean, because particularly since here in the United States, we see we've added jobs, gas prices are down, the economy seems to be growing, but I think that we have to think out of the box, and I know that you get paid to do that, internationally can really stir things up.
Yeah, I can, and you know, there's talk about this European potential recession here, and the truth is we sell an awful lot of product over there. China and Japan are slowing down a little bit, and of course we're selling product over there. We've got oil prices down, which is sort of a good thing, but for U.S. oil companies, that hurts their profits. And just plain and simple, the markets haven't had a pullback in several years, and when we get one, it's a little bit bigger than normal.
You know, we've heard a lot also about ISIS and Ebola. Does that have an impact, you think, at all also?
Yeah, there's definitely a fear factor in there. And, you know, when you have things like Ebola out there, it can certainly hurt airlines. And we've seen the airline stocks drop considerably. And if it did get to a point where people were just afraid to go out and shop or something for anything, that would definitely hurt the economy here.
So as you just mentioned, European recession fears, Asian slowdown, oil down, dollar up, Ebola, ISIS. Wow, is there some good news?
Yeah.
I mean, and it seems like I'm trying to remember this time last year. This is fairly normal for the month of October, isn't it? There's a little volatility.
It is, and I don't want to minimize any of those negative factors we said, but none of them is a real game changer. And typically when you have a major correction like 2000 or 2008, there's something significant going on that can really rock the economy. And sometimes a pullback in the market, a 5 or a 10%er, can turn into that big one, but more often than not, all it is a small pullback, and that's where the positives start to kick in. And as you indicated, you know, there are some good things out there. The U.S. economy is showing signs of life. The jobs numbers have been, you know, pretty stellar here of late, and a number of other things.
Do you think that what we are seeing now could impact locally here interest rates? I know every time you come in, I ask you this question because, you know, many of us have mortgages, and you last time you were here mentioned the end of next year. Could this push that back even more, you think, or not sure yet?
Yeah, any kind of a slowdown is going to delay the point when the Feds start to raise rates. And let's not forget, the Feds had sort of two parts going on to the training wheels to the economy. One set was what we call quantitative easing, where they were buying bonds and pumping money into the economy. And that is actually unwinding or finishing during October. So the market's saying, okay, now we gotta live without this bond buying program, but we still have low interest rates. And Janet Yellen, she wants to keep them low as long as she possibly can.
Yeah, I like that idea too. Also, it's considering the fact you mentioned that your phone's kind of ringing off the hook, is there something for those of us who maybe work for bigger companies or even smaller companies that we should be doing as a result of this? Should we be selling? Should we be buying? What suggestion do you have?
Yeah, well, first and foremost, it's not a time to panic. You know, let the guys on Wall Street do the panicking, and they end up canceling each other out more often than not. You know, we've had these wild swings, but some of them have been swings to the upside in October as well. So if you're on a steady as she goes plan, maybe if you're getting closer to retirement, you shouldn't have as much allocated to stocks, and you should consider, you know, going a little bit safer. But for now, this is a thunderstorm rolling out of the west and just coming through town, and you know, there should be clearer skies on the other side of it.
Don't panic. Stay calm,
Yep.
right? Joe, as always,
good
to see you. Thank you very much.